Good morning, everyone. Good morning. Good morning. We have a lot to discuss. We have a lot of movement going on in the market. So there's definitely a lot of things that we need to go over. So give me just a second. I'm going to set up our charts and then we'll begin to discuss about the pullback that we're seeing this morning. So right now you're seeing all the indexes pull back. Okay. I'm going to be talking about the indexes today. And I'm also going to be talking about a little bit more longer term time frame trades, just so you guys get a sense of where I'm at and what I might be looking to buy into just going forward. Okay, so let's go over the indexes first. We're bouncing all over the place, and I made a comment yesterday. My comment was, be careful with short-term trading. If you're not doing the day trading thing, it's going to be very difficult for you to do short-term swings because every day is just something coming out, right? It's not even every day. It feels like every couple of hours there's some news coming out. So we sold off for Marvell. Marvell is down about 18%. Why is that significant? It's because semiconductors are now down, right? If you look at, you guys can see right here on my watch list, Marvell is down by 18%. And I mentioned that I wanted this around 85. Now I think that there's a better price point, but let's start off with SPY. Hopefully you guys can see this on your screen. I'm gonna zoom in right here. So we're already breaking the trend line support. I've talked about this on my last live stream. I've said, don't focus so much on technical analysis right now because technical analysis is only an output of what's going on both geopolitically and what's going on economically. So when we're looking at just where we might perceivably see some support, that support is going to take you to roughly around the 200-day moving average. So that is just one element of technical analysis. If we want to add an additional element to that, there is some support around $570. This is just talking about the daily time frame. I know a lot of you generally are trading or day trading. That's okay. There's nothing wrong with that at all. I'm day trading a lot more with futures as opposed to 0DTE contracts because I think it's a lot more efficient. So what do we have right now for SPY? We have 570. We jump in here onto the 1 hour time frame. I have some support levels at about 575. All right. So we're trading at 576.50 right now. I'm not sure if we get a bounce from here. It's not for me to say. I have no idea. I have absolutely no clue. I have two areas that I would like to point out. The first one is between 580 to 583. And then the second one is between 568 all the way up to about 572. I don't want to be chasing too many longs. I took SPY calls. I actually took SPY calls 2 days ago because I thought we were going to start breaking above this $582 level and then target up to 590. So those calls are going to be torched this morning, right? They're absolutely going to be incinerated. So we might be seeing a little bit more downside. I want to look at the VIX real quick. It looks like the VIX is climbing up an additional 10%. Let's talk about the VIX because now it's part of the overall barometer of where we could be trading here. So the VIX sold off pretty significantly from 26 back down to 21. It was a 5-point roll off. Why is the VIX significant? If you're not using the VIX, you should be, right? You should be coming onto these sessions and usually pay attention to some of the little tips that I give you. Don't just make it about technical analysis. Make it about understanding what's actually happening in the market. So volatility is quite, it's moving. I'm not going to say it's historically high. No, it's not historically high. When you're trading above 25 all the way up to 28, 30, then it's historically high. Then it's significant. Then I know what I do about that. But right now we're kind of warm. We're not really boiling any water quite yet. So how does that translate to some levels on SPY? Well, let's go back to it. Hopefully you guys can see this on your charts. Let me remove the aftermarket data. That's basically it, right? Those are the two areas that I need. Obviously, there's going to be a red candle back down here to 575, 576. But this is what we're dealing with. I don't really think that the market is too conducive for you to start layering in a whole bunch of long positions. I have a lot of neutral positions, but the long positions that we're thinking about taking, I'm going to explain what they are, and I'm going to talk to you guys about what I would like to get into. So that's SPY right now. You already know 575, 570 is basically what I'm looking at. Let's look at Qs. Qs is the same thing. Let's just look at this real quick. Qs is the target level back down to $485. All right. So we're at $495 right now. Do we shoot up or do we shoot down? I have no idea, right? I have absolutely no clue. I'm looking for us to retest back up to 502 because we were there yesterday. We were literally there yesterday. We are actually higher than 502. So I'm waiting for 502 as a retest. But off the 4-hour time frame, the two moving averages, even though I said don't focus too much on technical analysis, what I just want to wait in terms of indication, I want to wait for the 8 and I want to wait for the 21 to start crossing each other once again. So if you look on the 4-hour time frame, you got a sell signal all the way back up at $535 just off the 4-hour. You have never regained that cross signal for a buy on the 4-hour quite yet on SPY. You might get it on the 1-hour. You might get it on the 30-minute time frame. You got that here, so you got a false signal, and then you got a false signal right about here. And you definitely got one yesterday, right? You definitely got one yesterday. But off of the 4-hour, you don't got it. Generally use 2 time frames to confirm. You want to use a higher time frame, and then you want to use a relative time frame. So 4-hour, 1-hour. If you're going to use the 1-hour, use the 5-minute to confirm your entries, so on and so forth. Cool. All right, so that's Qs. Obviously, my target is going to be lower. The VIX is up. I don't have any bullish sentiment. Let's go into IWM. Most of you are going to be interested in IWM because you like your small caps. And a lot of you crypto people, obviously, you're looking for some sort of bounce in the crypto market as well. I know that we're getting a bounce out of China. China is skyrocketing right now. My investment in China that I put in a year and a half ago, it's astronomical. Now everyone is asking me. I've had no less than about 20 people ask me, when are we going to jump into China? And I'm telling them, I've been in China for a year and a half. All right. So on small caps, on your daily, this one's not that hard. Your target, when you're pulling back on your fibs, hopefully you guys can see this on your chart. I'm going to try to clean up my chart a little bit. The support level for me was 202. All right. What are we trading at right now on IWM? We're at 206. I'm going to say we trade back down to about 202. So another $4 move lower. That's where I'm going to start looking for better risk reward to the upside. It's okay if you have a bias to the downside. I'm not arguing against bias. I don't trade bias. I trade risk reward. Okay. I know it's kind of funky for me to say that, but I trade risk reward for everything. So if you tell me up, down, we can have that conversation, but I usually like to add an additional layer to that. Does it make sense for me to take a long trade here and just wait out the trade, or does it not? So the risk reward to the downside right now, if I were to take a short trade, that puts me at about a pullback of roughly about 4%. I'm waiting for the upside trade because we can take this all the way back up to 225. I'm not saying now. That's not what I'm saying. But I'm saying the risk reward is better to the upside. So I'm going to wait for this to bottom out, trade even lower, and then have an even better risk reward to the upside. Do you see what I'm saying? Do you see the difference between me saying just buy short or sell short and buy long? It's completely different. It really, really is. So let's focus here on the 4-hour time frame. What do we got? 4-hour time frame is still a gap, I would say, all the way back down to 202, but I have a target at 197. I want to share with you guys the voodoo lines. If you're not familiar with the voodoo lines, just in case this is your first session, or maybe you've just never heard of the terminology before, bear with me, those of you that are here and you already know what they are. The voodoo lines are just a very expensive indicator to tell you where potential support and resistance can be on the higher time frames. So on IWM off of the daily, you have 3 colors that you want to pay attention to. The red is going to be your most significant support and resistance level, supply and demand level. Your green is going to be just a step below that, and then your white is going to be a step even lower than that. So they're the intermediate areas. You have a lot more white than you have red. So the red area on IWM is 198. What does that mean for us as traders? This is based off of fibs and also the Elliott wave theory, right? These are just a whole bunch of technical terms. Basically, what that translates to is if we trade in this area, generally institutions are going to be watching that area. It doesn't mean just because it hits that red line that you take a long or a short. That's not what that means. It's just an additional layer of confirmation. That's all that is, okay? So 198, and then I have a little bit of a support level at 202, which is what I just mentioned. So we're at 206 right now. In my opinion, for risk reward, check this out. I'm going to show you what I mean when I say risk reward. I'm going to come in here. I'm going to take my risk reward tool, and then I'm going to look for something very similar to what you guys are seeing on your chart, where I'm going to look for a long and then possibly try to take that to its previous resistance level at 215. So my risk reward here might be very close to a 7 or 8 to 1, as opposed to having a risk reward to the downside. Right now, it's looking like a downside of about 3, maybe 4 to 1. It's still very good. It's still very good. I prefer to wait. Okay, that's just the kind of trader I am. Some people sometimes comment, why don't you short more, or why don't you take the short side? It's just because I'm making a decision on whether it is I want to wait, or if I don't want to wait, I'll take a short-term trade, but usually it's going to be in the form of a day trade because I have no idea what's going to be happening. I had no idea that Marvel was going to beat earnings, not significantly, but sell off by 18%. So that's IWM. I am interested in trading the diamonds. The diamonds are going to be DIA, the Dow Industrial Average. This is very close to my support level here at 422. It's extremely close. We're trading at 426 right now. Out of all of the indexes, to me, it is the strongest one out of all of them right now. If we trade back down just a tiny little bit, very, very tiny bit, down to 417, I'm more interested in it at that level. I'm going to share with you guys the voodoo lines. For those of you that are still on the call, I'll get to your comments here in just a second. I really want to get through this because I think it's important for you guys just to have a broader sense of what the higher time frame support and resistance levels are. So please bear with me, okay? All right, so our voodoo lines take us all the way back down to 418. So there's a snow line here, and then you have a tree line. This is interesting. You have a tree line exactly where we bounced off from. So this is my alert, and that's the tree line at $424. So those are just significant levels to pay attention for some sort of reaction. You don't just take the voodoo line level, because a lot of us, we think we hit a level, and then we're asking questions like, do I buy at this particular level? Well, you need more information. Are the moving averages there? What's the market sentiment? What's the market structure? It's not necessarily there. I don't really see 100% bullish structure. I'm starting to get very close to a bull signal right here on the daily. Let's check out the 4-hour. Yeah, this still is trending a lot lower. So I apologize that the screen is a little blurry with all these lines. But basically, we have another leg to be made lower, close to 418. Okay? Now let's go over some of the stocks that I'm interested in getting into. I have to bring up Marvell. I have to, because I am interested in trading it. So let me, MRVL. Let's see where we're at right now for after hours. We're at $74. My support level was 80. Okay. This is a company that about 4 or 5 years ago, it was all the rage. Still a great company. I believe they're at $78 billion for valuation. After selling off 18% here, they're going to be a lot lower. So let's see where we can foreseeably take this now off of the daily time frame. Where support, my support was 92 and 80, right? But we blew that to crap. So that's not happening. We're below the 200-day moving average by a significant amount. Where is the volume profile? I want to explain the volume profile in 10 seconds or less. It's going to tell you for an anchoring period. So my anchor is all the way back here. For an anchoring period, how many shares were traded at volume for a specific price point. That specific price point where it was highest traded for volume is $68. So where do we want to take this now going forward? We're going to look at a support on Marvell right about there where that green bar is. What does that translate for you guys? What does that translate for me? That means that as soon as I start seeing some buyers, after we get through all of the negative sentiment that we have on Marvell for this current time period, I'm going to be looking for a proper risk reward trade. I'm going to explain what risk reward is right now, so you guys understand this, right? For those of you that already know risk reward and know that I preach it all the time, bear with me. It doesn't change. Risk reward is always the most important thing ever. So let's say I take this at $71 and I set a stop loss at $67.30. Cool. My risk reward right here is a 5 to 1. So that means for every dollar that I'm risking, I'm looking to make 5. Does that mean that I have to be right all the time? No, it means that I have to be right 25% of the time. Statistically speaking, us as human beings, we don't get things right in the market no more than 50% of the time. So 25% actually benefits us as traders. This is thinking more excuse me. I have sinus issues here this morning, so my pronunciation is a little bit off. But thinking in probabilities as opposed to thinking in terms of up or down, right? Up or down is too binary. It's too simple, right? You're going to be outperformed by people that are thinking about the stock market in a slightly different way. So put that into perspective. Does it mean that when we hit $68, I'm going to be taking a long trade? Not necessarily. I'm going to be waiting for the signs in order for me to take the long trade and then buy into Marvell. So this is number one. I'm not going to spend too much time explaining some of the other stocks because you guys get the deal, right? So that's number one. I've been interested in getting into Google. For those of you in the Discord, please don't give it out in the comment section. But Google, I'm interested in Google. We're below the 200-day moving average. We have a support here at 165. I think Google can trade back down to 150. If it does, I will be delighted. All right, I will be elated because I think Google is top 10 stock in the world. So watch out for Google breaking below $165. That's one of the things that I would like to buy into pretty heavily. All right. Next, I want to talk about something. It's TNA. I mentioned this yesterday. TNA is a 3 times leverage position. Why do I like TNA for a potential position? If anyone noticed finance 2 days ago, finance was the worst performing sector by far. So you look at Bank of America, you look at, and this has nothing to do per se for finance, but it has everything to do with small caps. There's a lot of finance stocks in the small caps. What I'm looking for on TNA off of your daily is trading back into one of the demand levels right here. I'm very interested in this trade. Trading back down to sub $30. Back down into 28 territory, I'm interested. I'm interested for, as I will always say, for a high risk reward trade, okay? So high risk reward will put me, let's see what the calculation is. If I can get a trade off close to $28, I'm going to try to move that up to about 37. So that's almost a 10 to 1 risk reward. Okay. So for every dollar I'm risking, I'm trying to make $10. This is what I'm looking at. Let's talk about Tesla. I know a lot of you are very interested in Tesla. So let's go over it. I have an opinion on Tesla that we trade back down to 250. So 250 is another $22 lower. I'm going to be taking leveraged Tesla shares as I did last time. Many of you are very well aware of my Tesla trade. I caught a lot of the run, and then we caught this run basically when POTUS was announced that he was going to be president. So we have this entire run right here. We got all the way up to $489. I don't think we reach those highs anytime soon. In my personal and humble opinion, this is just my opinion, okay? You do not need to agree with me because I understand that we constantly clash with opinions. I think that they are losing market share. I also think that despite the fact that Elon Musk right now is running the country, basically, right? That's not a political statement. It's just fact. He's definitely running things and he's deterring his attention from his companies into more policy directed initiatives. Fine. I would wait for Tesla to trade back down to about 240 or even lower. I have a price target on Tesla at about $200. Okay, so that means we sell off another 70 points. Had I said that about a month and a half ago, I think I would be assassinated because the Tesla bulls were all over this saying that this was going to go to $500. I called out 330 on Tesla numerous times, numerous. I was very wrong because it traded way below 330. So $200 is going to be my target area for me to start buying into Tesla. What is my justification for that? My justification is trading back down to where we saw the bull run. That's at $213. So I think it completes the gap completely lower. And I think that at that point in time, that's where you start having buyers once again on Tesla. The stock that I will take will be TSLL. Last time I bought into this, I bought this at $8.50. Okay. And then I took this off at roughly about $16. I'm going to wait for that once again. So we're at $11.50 now. The gap to be filled lower is $9.25. That's what I'm going to be waiting for. Cool. I don't mean to offend anyone on my technical analysis. You do not need to agree with me. That's perfectly fine. You're just here to listen to my opinion. But I always like to justify what I'm looking for, why I'm looking for it, and my focus. My focus is not to be right. I don't care about being right. I care about risk reward because I don't have to be right 50, 60, 70, 80% of the time. I just have to focus on risk reward. That's what we want for you guys, especially if you follow us. I don't want you to think, are they always going to be right? Of course, we're not always going to be right. It's not about that. It's about playing the numbers and playing that risk reward every single time. Cool? So that's Tesla. Last thing that I'm going to bring up, let me see how much time I have. I have 9 minutes. Is going to be coin. I called out coin at $200, right? I called it out at 200 and then I called it out at 180. I do like coin. I actually do. I like coin if we hold $200 once again. All right. I don't like it until we hit $200. So not 215, not 210, $200 or lower, close to 190, maybe even 180. Then we can open up a conversation in taking this long, right? So that's it on coin. I don't need to overanalyze it. That's what it is. All right, let's see if we can find one more thing. We're really selling off here on the Qs. We actually just gave up another dollar since I started this presentation. That's it. That's it. So we went over Marvell, we went over the indexes, and we went over Tesla. Those are the things that I think you guys should focus on. We also went over Google, right? So Google is one thing that I would like to buy into, more so than probably what I am, hint, hint. And then I also mentioned TNA. So TNA, I think very shortly, I will look to buy into TNA. Okay, so it is one of the stocks that I would actually like to buy shares into. I'm gonna leave the chat open for you guys to ask me questions, as I generally do. I want to make this also part of my presentations going forward. For every live Instagram that I do, and now you're going to be able to watch these on YouTube because now we're rolling out with the YouTube content. I want to teach you guys how to think about trading, because sometimes when we talk to you guys are constantly asking us, how do I know that we're going to be trading higher or lower? That's not the right question you need to ask. You need to ask, where is the risk reward? Is it to the upside or is it to the downside? That little shift already starts to help you with your problem. Your problem is that you're thinking too binary, right? So that's going to be more part of the YouTube stuff. I like to ask, if you found today's session informative, give me a thumbs up just so I can get some feedback from you guys. But if you didn't find it informative, also give me a thumbs down. That's okay. That's totally fine. I like to take feedback, both positive and negative, just so we can always improve the information that we're putting out there. It's all about what kind of energy you're putting out there. We do not want to be putting out that Lamborghini energy. That's not who we are. That's definitely not who I am. I'm all about, if you learn to think about trading in the proper way, you can be successful long term. So let me know in the chat. And besides the thumbs up and thumbs down, let me know what stocks you guys would like me to talk about in the last 5 minutes. Cool? Let's see what we got here, guys. Let's see what we got. Yeah, I can look at General Motors. So let's see what we have here. General Motors and Ford. I would actually prefer that you focus on General Motors because Ford doesn't have very good output. There's a couple stocks that people usually bring up, and they're bringing it up because they see the potential in it. But something like General Motors doesn't have a lot of attention from the market. Where's all the attention right now? It's in finance. It's definitely in energy. It's definitely in consumer cyclicals. And it's definitely going to be in tech. Tech is the number one focus. When we're looking at General Motors, you're probably asking me, I don't know, because I'm not having a conversation with you one-on-one. But on General Motors, you're more than likely asking me because of the 200-day moving average. That's great. Where's the risk reward here, to the up or to the downside? Let's analyze this. Let's go over and use the calculator. If I'm going to take a long trade, I'm going to set my stop loss at $46. And then I'm going to try to take that to approximately 54. That's a 12% move. Is that a good risk reward trade? Yes, it is. It's only going to be a good trade if your stop loss is set at what I just said, $46. If you move your stop loss back here, then there's no trade. There's no trade for you to have. So in terms of target area, if you think about it like that, if you are looking for a long trade, you probably want to wait for about 46, or the next level lower is going to take you approximately to $44. I'm analyzing this real time with you because I haven't been really interested in GM for a while. The next leg lower is going to put you at about $40. So what does that mean if you are looking at this long? That means that your risk reward is now even better. Do you see how that works? That inverse relationship, God, y'all need to be on that like crazy, like white on rice, right? So is there a risk reward trade here to the downside? In my opinion, with the market selling off, GM doesn't look all that weak. But one comment that I just want to make sure that I'm very clear with. I don't see a lot of momentum, and I definitely don't see a lot of interest in GM. So if you're looking at this for a long-term hold, I would personally say that you should wait for back down to $40 because you're going to have an abundantly larger risk reward trade where you can trade back up instead of 12%. You're looking at something very close, reminiscent of 30, 35%. So think about that, right? I'm not saying yes or no. I'm just saying look at this from a different angle or a different lens. So that's my comments here on GM. I don't think it has a lot of interest in the market. So I want to go where all the inflows are. I want to go where all the volatility is because those are where we can see a lot of movement in the market. Cool. That's my answer for GM. What else we got, guys? AVGO. I'm going to tell you right now. I'm not going to spend too much time on AVGO, but I'm short AVGO, right? Why was I short AVGO? Do you care that I made $15,000 on AVGO? Who gives a shit? No one gives a shit. But what you should care about is you should care about the signal and why I took AVGO, right? Why did I do that? We have resistance all the way up to $236. And then we had a gap to fill, right? Gaps are such an important psychological concept in trading. It really, really is all about that Fibonacci strategy. So when we're looking to put on and plot on Fibonacci's here on our chart, check out where the golden area is. It's at 196. So where do you think I shorted AVGO? I shorted it up in this upper bound. Why did I do that? Because I was anticipating us trading back down to about 175. So today I'm going to be up on my AVGO trade. I need to take it off before earnings. You're asking me because of earnings. I don't think that you should do anything on AVGO until after earnings. If you sell off even more, I'm thinking anywhere between 140 to about 155 in order for you to buy in on AVGO. So in my opinion, right now, there's nothing really to do because you're filling the gap back down to the 200-day moving average. You need to wait a little bit. Why did I take a short position on AVGO? It's just because we had more risk reward to the downside than we did to the upside. I never take trades after a move like this. I generally do not take a trade trying to take that further up. I don't do that. Some of you guys are taught that with technical analysis. In my experience, statistically, it doesn't work very well. So 175, and then I have an intermediate area here at about 160, 165. Those are the two target levels that I would wait for. Let's look at LCID. I'm going to go through these a little bit quicker because I only have 3 minutes here. LCID will be a very good risk reward trade once you start seeing more. You need to start seeing moving averages off the 4-hour time frame. So you don't have that here. When you start seeing the 8 overcoming the 21 and the 34 as well, let's get rid of the 200 here for just a second. Let's get rid of that, and let's get rid of that. When you start seeing that you're overcoming the 34-day moving average, this is the 50. Let's go to the 34. My bad. The 34-day moving average puts you at about $2.35. I did catch LCID the last time. Where do you think I took it? I took it when we were overcoming the 8, the 21, and the 34. Did I know we were going to trade all the way back up to 360? Of course I didn't know. But risk reward, first thing. Do you have good risk reward here? You do. You do. But you do not have a signal quite yet. It's not there. You're looking at the double bottom for the intermediate time frame? Yes, you are. But you got to wait for at least the candle to spit out. You're not going to catch the perfect bottom, right? That's not going to happen. But what you are going to do is position yourself for, let's say you get in at $2.25. My recommendation is going to be $2.25. You set a stop loss at a break of structure, and then you try to take that up to about $2.75. That's at least the 2-to-1. That's what I would recommend on Lucid. Cool. Let's go over NVIDIA. All right. NVIDIA, I called out NVIDIA at 105. It seems like we are going into that area. So we need to hold 110. We can't hold 110. We're going for 105. I will buy into NVIDIA like a madman. Like a madman. You do not understand how much money I will put behind NVIDIA. Y'all have no idea. I don't even want to say it because I don't want to put any crazy ideas in your head. It's my money, so I can make all these crazy financial decisions, but if I'm going to recommend it to you, I'm going to do so at a professional capacity. In my personal opinion, 105 is where I would watch it because the valuation on NVIDIA, even though it's very high, they're the best company in the world right now. They really are. They're slowing growth quarter over quarter, but they're still astronomically strong in the market. So 105 and then back down to, I would pay attention between 95 all the way up to 105. So that 10 point, I've called this area out a few times. I've actually called this area out twice in the last like 6 or 7 months. Watch that area because buyers will defend till the death, the $100 area, till the death. But right now, for the short term, in my opinion, it's going to be 110. Let's see what else. AMD, I cannot give you a subjective, I cannot give you an objective opinion on AMD. I cannot do that. I can recognize that about myself because I am in AMD right now. So every opinion that I would give you is purely speculation. I cannot tell you, hey, I think AMD, we should be putting a lot of our portfolio into AMD because that's what I'm doing. But that doesn't mean that that's going to be right for your portfolio or for your trading psychology. I think that the valuation is not being reflected on the chart. I'm looking at the financial statements and I'm seeing that it's growing quarter over quarter. And I've made the adult decision that I want to hold AMD for a while. So that's exactly what I'm going to do. In terms of technical analysis, again, I'm telling you that my opinion does not matter on AMD because I cannot be objective. My subjective opinion right now on AMD is that I'm going to be buying more AMD the closer we get to about $90. All right. So that's what I'm thinking on AMD. Again, take my comments for what I'm saying. I cannot be objective on AMD. Okay. So AMD, I can't give you too much of a strong opinion there. Damn, I'm running here. I'm going over time. Alibaba. Let's see what we got. I don't think Alibaba you should be touching. Alibaba, you either took at the breakout or you shouldn't be chasing here at the top. I do not take trades at the top like this. I just said this. I never, ever, ever take a trade at the top. I would have taken Alibaba if it fell back down to 105 because that's the golden retracement area. That's it. Okay. Is that a stretch from where we are? That's a $40 move to the downside. Yeah, that's what I'm saying. Don't tell me that we can't move $40 lower. The Tesla bulls, when I was calling out 330 when we were trading at 420, wanted to kill me. They literally wanted to crucify me. But you cannot ever, ever take off the table the fact that we can fill the gaps lower. So Alibaba, Yin, KWEB, all the ETFs out of China, are they strong right now? Baidu, you're talking about a whole bunch of different stocks. Are they strong? Yes, they are. But this is not the moment to buy in. I don't think so. This is not the moment to short either. You just want to wait until you pull back either to 105. I would say 120 would also be a target area, okay? So those are just my quick comments on Alibaba. But more than likely, you will get someone like me interested in Alibaba only at 105 because I can control the risk reward a lot better than I can here. Most new traders are going to say, hey, this is really, really jumping right now. So I want to chase that so we can trade back up to 160 because off the weekly time frame, we were trading all the way up to $300 during COVID. That's fine if you think that way. I'm not going to discriminate. I'm not going to say anything against it. I've learned my lesson. This is not where I take positions. I take positions on retracements. There is no exception to that rule whatsoever. Okay? No exception at all. Crowd is a good one, but unfortunately, guys, I'm out of time. I can't go over time because I do need to pay attention to the Discord. So I appreciate you. Thank you so much for joining the session. These sessions are now pre-recorded or recorded when I'm doing the live. So they will be uploaded to YouTube. Just in case you want to watch me in 2x speed, then you can go over certain information. We're going to have a lot more videos coming out on YouTube. So I would suggest that if you so choose, by your own fruition, you can join our YouTube channel where all of the content we go over and a lot of the opinions that we share are going to be there for you guys to enjoy for yourselves, okay? That's all I have for today. Thank you so much for joining today's session, and we'll see you guys for... Actually, we're going to be live this weekend because we're all going to be in Dallas and we're all going to party. So if you guys want to join the live sessions that I think we're going to have on Saturday, then feel free to do so, okay? Thank you, guys. Enjoy your afternoon. Enjoy your day, wherever you are, and we'll see each other on the next live session.